What's going on, guys, and welcome on into the channel. Welcome on into the stream. Some minor technical difficulties for a few seconds there, but we're good to go. Okay, so we are live into the close. So we got about an hour and a half of the stream. We are currently sitting as we speak right now across the board in the markets. S&P, we got the Dow up, S&P up, NASDAQ up 2%, roughly. S&P almost up 1%. Dow is just barely green. So the Dow is definitely the lagger, at least as of right now. And it's been one of those that we kind of been talking about for a while. The Dow kind of lags on green days and kind of holds up better on red days generally in terms of the S&P and the NASDAQ. NASDAQ is much more volatile as of late. Pumped to see how this week finishes up, but it looks pretty strong as we speak. Let's go over to SPY here. I'll talk about my positions. We're actually looking like we want to pop a new high of the day as we speak. Right now, it looked pretty, ugly early on. We did look pretty red after the Amazon earnings yesterday. We had the live stream for that. So if you guys want to go back and check that out after or whatever, you can go ahead and do that. That was crazy. Snapchat, Amazon, we saw the crazy moves across the board. Then we kind of sold off in pre-market today. Really, futures look nice and green, chopped around, then we just sold off in pre-market. Dipped down here into this little box. Now, this box I drew in because I'm looking at this saying to myself, I like this range for calls, for SPY calls. And I did buy one. I wanted to buy more, but we didn't really get deep into that range. So I kind of wanted to, I don't want to say front run it, but I wanted to some degree make sure I had some more exposure. I have some other ones that I sold one this week earlier. I have those 500s out to June. It's kind of a lottery play there. I'll stop out at break even on those, which we're up nicely off those, so nowhere really near. We probably got to drop below 440 for me to have to stop out on those. I bought them back in here last week. But the highs of last week were roughly in the 440 to 444 range, and we just teetered under that 444 on SPY today. So I grabbed some calls, 455s, a little risk. I could have grabbed like 450s or something like that, or I could have even gone in the money if I wanted to. They were a little bit cheaper to go this way, and this way I was going to say, okay, I wanted to play it the cheaper way just so that I can add more if we come into this range, but I went 2 weeks out. So I went to February 18th, and I could sell them now if I want to for a day trade. I'm up like 45%, whatever it is, but I have a bigger picture view on these, so I'm going to let this thing ride out. I'm looking for a 460 target here. Ultimately, that could come next week, but I have 2 weeks of time on those. So at this point, because I kind of got not lucky, but I timed it pretty well as it topped it came into that range barely, and then boom, got bought up. Again, those will be a stop out at just north of break even. So I bought those. If I go into these, I bought one of these at 326. We come back under 350. That's it. I'm out. Stop loss, roughly mental stop loss here at 350. So this way I'll lock in, at least I'm not going to go red on the trade. That's the idea behind that. But outside of that, though, looking back, I kind of made the mistake because I didn't go with QQQ. And why I say that is because look at QQQ, a lot more volatility, so it's up a lot more relative today, right? NASDAQ 100 essentially. So what we're looking at is this is the range from 357 down to 350 was the range or the range of the highs of last week. The highest point here at 357 before Powell spoke, and then or right after Powell spoke, a little pop, and then we faded off. And then the lows are a rough range I drew in here as this level right here at 350. Also, that 350, if I'm not mistaken, lines up with the key level from the past. If we zoom our way back, 350 was the lows that we saw back in October, back a few months ago. So that's a key level. And so we kind of came down just again in pre-market right to that spot. Bounced right back up, came back, and then what I could have done is played QQQ instead and gotten like some 360 calls or 355 or something like that. As we were in this range, a lot nicer than SPY. We came back into a better range, but I didn't. So it is what it is. It's fine, no big deal. Looking back, hindsight 2020, and that's what I would have done. But okay, so we're looking at QQQ. It's making highs. So we're kind of, we gave back a lot of what we kind of felt was the Amazon saved the market, whatever earnings kind of felt like they saved things, at least temporarily. The jobs report comes out. We'll talk about those numbers and whatnot in a second. And we'll talk about kind of the realities of that and what that really means. And now we're coming back and we're gaining that ground back that we kind of lost. So we're coming back up into the range that we were pretty much right after Amazon earnings in the after hours yesterday on QQQ and SPY. So pretty much if you were to just think about it, bigger picture, if we pretty much finished this week up. If we go to the weekly chart right here on SPY, we didn't really finish up that much higher. It looked like earlier today. We're going to finish a little bit higher than where we were last week, right? We're up about from last week. We finished up here towards 441, about $10 higher. It's a pretty good move, to be honest, on SPY. But it looked like we're looking like we're potentially only finish, we could finish potentially right in range because we were down here in the 444 area this morning. We might finish up, only a few points from last week, but we end up looking like we're pretty strong here into the close. So we'll see how we can get up. But we're up over 450 on SPY though. We're kind of, I didn't like it. Is more of a difficult type of range to play. And I know people were having on the lives. It was kind of a difficult spot to say, yeah, do I really want to pick some stuff up? I don't know what to do. And that was coming on like, Wednesday time frame. And, when we were talking about on that stream, I believe that, when you kind of get that feeling of like, okay, I'm kind of not really sure what's going on. I'm not really sure if I missed the dip, if this is not, if I should be getting in and whatnot. Usually the best, idea, the best play is sit back and wait and be patient and look for something else and just take your time because there's no rush to get in, especially in this market. It's been choppy. Absolutely no rush. And any pop, most likely that you chase, there's probably going to be a dip that you can get in on at some point in the future. Probably until that changes, but at least that's been the trend as of late. So it worked out. If you waited and you were patient, you could have got better entries on stocks that you liked, as the overall market has pulled back, since then. What's going on in MEOS? It's just got no volume. The thing popped down to like 102 today, I think. We actually had a decent amount of shares go through 28,000 shares. But let's be honest, 28,000 shares still is in the grand scheme is not that much at all on this thing. It's just got literally like no volume. So these stocks can pop up 5, 10, 20% on 100 shares, 500 shares, 1,000 shares. So that's the nature of playing small caps right now, or especially low floats. When there's no volume, there's just these things could float around. Like they like low floats are just floating around right now. Nothing really changed. The one thing that I will say that did change, if I pull up, I did see on Mesa MESA got some downgrades or market perform ratings. So, whatever, but I'm not really too worried about that. To be honest, is that like a big deal? Market perform, if airlines pop back up and start doing well, market perform might not be a terrible thing at the end of the day. So I'm not really too worried there. NVOS, last update or last PR was back in on the 18th of January. So, a couple weeks ago, and that was their first quarter earnings. And again, I read through that and I like that. And I still feel that those numbers should get even better coming the next quarter. So I have no reason to get out personally, but you're kind of just riding the 50 SMA to the downside. So that's your kind of resistance point over that 50 SMA. And with volume, then things get interesting on some of these things. That's kind of the nature of how a lot of these small caps have been, but that's just been, kind of what we've been dealing with there. So not really, as much as it kind of sucks, like I'm just kind of letting it do its thing. I'm not really trying to add. Realistically, it wouldn't be a terrible idea to trim some of those if you feel like you're a little over leveraged, which I probably could do on some of this on NSPR, NVOS. I could trim a little bit if they pop back up with minimal volume, trim a few hundred shares off them just so that I don't feel like I'm as worried about them. But if you really want to, but I really don't have a need to sell them right now or need to get out. Especially when there's this low volume in the market right now for those small caps and low floats. But any was actually nice. I shorted any last night, just like a 250 share short overnight, which is risk, so I didn't play that much. But I took it from I had an average at like 285 or something like that, and I ended up covering it this morning here as it. I thought we'd get a dump at the open. We didn't. We held 250, and I covered it like 263. So 20 cents on like 250 shares is like a few bucks, whatever. But that was what because again, these small caps have been pretty dead. Now any is pushing up. Bitcoin's doing pretty well. We can look at that too. So those crypto miners are actually, in the top gainer list today. Any is one of those. If I scroll down a little further, we have BTBT. Remember this guy from a while back? Crazy squeezer, went from, what is it? It went from like $4 to $20. Now here we are back at $4. Could it make a crazy run again? We'll have to see. Bitcoin needs to be strong, but again, it could squeeze out, just like any of these small caps have been kind of as of late. No, they need they need initial day. So watch these two. If we look at Any's chart, it kind of showed the signs, I want to say, ahead of time. Why? Because we bottomed out and then we kind of held up and we kind of grinded higher the past couple of days. And so it kind of showed that, hey, the volume was actually increasing too. Ever since February, the 1st, 2nd, and 3rd, volume was actually increasing. We had almost 5 million shares, over 5 million shares pretty much on average each of those days, where the stock would normally trade, only a couple million shares a day, not even 5 million. So it started to show some signs, and that's what you're looking for and kind of potentially trying to time I guess the liftoff of some of these small caps. If you are looking at, okay, I have a few that are on my radar, I'm watching them, and all of a sudden I'm starting to see some volume coming in. Either they get news or whatever. So BT is one that, hey, if this thing pops up and all of a sudden next week it kind of holds up, Bitcoin holds up, this could be one to look at for a bigger move up. And I would say, a great first target zone for a lot of these things that are well below the 50 SMA is that 50 moving average right here. So on BT up towards 625 or so, or even I'd say $6 or so could be a really good spot. For if this thing wants to magnet up and have a run, that's going to be a pretty good spot. Any by the way, ANY is right at the 50 SMA right now. So I would be honestly surprised if I wouldn't be surprised. I mean, if this thing just sits flat or pulls back today, because it literally just hit the 50 SMA. So if you were looking to short this thing, which I'm not even sure if you can get shares on Webull, but other platforms I'm sure you can, this could be a decent short just looking at the big picture daily chart. If we can't break 325, pretty much the high of the day, take a short here, look for a pullback essentially back into the trend. This could be a good short opportunity back into this trend. Pull back down towards like $3 could be a good spot to cover if you're playing it like that, if you wanted to. So I'm sure that's a good idea, or at least I'm sure people are thinking that way based on it hitting the 50 SMA right now as possible resistance. So we'll see. We will see. Nat gas dumping right now. Cold is popping. We were talking about that before. That's awesome. And cold. Let's take a look at how that's doing. Look at that. Cold's up 17%. Beauty off those lows after we had the pop on natural gas, after Boyle was going nuts. Look at Boyle back up here. It's pulled back quite a bit, down 16%. So these are kind of crazy to play too. Tons of volatility there in that space. Now, if we dive into, let's see, good day for crypto. Yeah, crypto I was going to talk about because we're just looking at the miners, and that's kind of one that if you weren't paying attention to crypto, the miners today probably could have got your attention. Look at this, a little Bitcoin breakout right here, back up over 40K. First time in a couple of weeks we've been back up over 40K. And I had this downtrend run, and we're trying to break it. So the only problem that I would say, this could be a false breakout because 41.5 or so with the prior area of support right here was an area of support. That'll be resistance right now. So if Bitcoin gets back up over the low 40s, back up into the mid 40s, then I really like that breakout. And I would like those continuation plays for some of the miners, the BT, any Riot, Mara, all those good names. Hive, I'm sure there's plenty. Hut, there's tons out there. I think Hive is a miner. I know Hut is. So that's Bitcoin. It's breaking that downtrend right now. And then let's see, what's ETH doing right now? Ethereum is similar situation. Let's see if we can draw a little downtrend here. Not perfect. Actually, it still hasn't gotten to the trend yet, roughly. If you draw it off of this, it's not the best down. There's multiple downtrends you can draw inside of this overall. It's kind of breaking this one that we kind of can draw right here from these couple of highs right here. It's breaking that one, but it's got, again, same situation. It's got to get back up over 3K and into the mid to low 3K level. And then I would be, that, and then it starts to hold up, then that breakout looks a lot more appealing, right? If we can start doing that. So we'll see. SoFi, what do you think about call options? Yeah, I mean, the good news, though, I think for this is that this could be a little signal here, is that we're having a good day. I still want to talk about the jobs report really quick. We'll dive into those. I have those articles pulled up. But we're kind of seeing, the NASDAQ tech and growth and speculative stocks are kind of popping back up today a little bit here. So it's kind of a good sign. Now, SoFi, I don't want to say it's like a speculative stock, but it kind of is in terms of the speculative, nature of the growth of this company. But it is one of those higher growth type of names. So it's been just literally chopping around since 2022 began. It has been a chop fest. So there's just no trend really you can, build out of this. Like, look at this. Since the year began, I mean, look at where SoFi has been. It's been down to 1050. It's been up to over 1650. I mean, it's got crazy range, and it's just there's been no trend here, right? We kind of saw some trends back in November through December. We got a nice clear downtrend here. It was downtrending, pretty nicely. Before that, we had a nice uptrend. You can build, higher lows. It was uptrending. Now it's just like, I don't know what it's doing. It's trying to figure itself out, which that, period of trying to figure itself out could be potentially trying to put in a bottom for now. If we see, Bitcoin's making some nice moves, if Bitcoin has a good weekend, it could all change come Monday. But that generally signals that we're seeing the speculative plays in some of those higher growth stocks and just assets in general doing better, which is a good sign, I would say, for a stock like SoFi. So to be honest with you, this is not a terrible zone to be buying it. It's not perfect, but it's hovering around a key area of support. It's been choppy. So again, it's been choppy. So give or take a few percent. This could be a spot that this thing ends up popping right back up to 17, $18, which is a key level we've been watching from the past. And this could be an area that I would be looking at, taking profits if you're buying calls. So if you're going to do that, understand this. It's really going to be correlated to the market. Do you believe the market's going to be heading higher? If the market's not heading higher, if tech's not going higher, if you don't believe that, then these calls probably don't make sense. But you believe the NASDAQ's going higher. You believe QQQ is going higher. You believe SPY is going to go higher. You believe growth has a little bounce in it, whether it's a short-term bounce or more sustained bounce. Either way, this could be a nice play. And if you look at call options, I wouldn't be going out to next week, and it's much more risky. Yeah, could you kill it if SoFi pops to $15 next week? You'll kill it, right? But again, next week is much more risky. I would probably go out to like March 18th or longer, realistically, if I'm looking at something like that. So let's see. For example, my SPY calls that I bought out for, really I'm looking for a move next week. Those ideally I'm looking to sell. I bought 2 weeks at a time, but I'm looking to get out of those next week for a nice move up. And so that's kind of the idea. Making sure I give myself an extra week of time or extra time on my option, just in case it takes a little bit longer, or just so they hold some value better. Now SoFi, if we look at these, if you were to play like $10 calls, that's a lot safer than like a 15 or a 20. Now the 15s, if we go to 17, those could kill it, right? But that's so much risky. So I would be looking at the $10 calls, and be looking out March or longer as a possible really nice play. Now these are going for 264. So right now you need to get back up to 1265  makes to break even by the expiration date. So not even, that's about an 80 cent move from where we are right now on SoFi. If SoFi makes a pop of 80 cents by the expiration, is that here at like 1250? Let's just do the math here. SoFi is right here. It's a 5% move, 6% move on SoFi. You're breaking even, so you don't need much. But if you get a pop of 20% on SoFi in the next couple of weeks, then yeah, those options are going to be juiced up and they could be 100% plays. So I like that. If you're going to play it, I would play something around the money, either the 1250s, the 10s, or even go even further in the money if you want it to be safe. Play something like that with at least out to March. Not a bad idea. I had some SoFi calls a while back, and I think I sold it into one of these pop days just because, we kind of got lucky in terms of we saw further downside in the market, just because I just didn't need to hold those and have to tie up that much capital, at least at the time. I wanted to be a little bit more nimble, but free up some more cash just because I felt like I was spreading myself way too thin, and I definitely was. But trying to minimize that this week really is just, I'm up this week, but it's been like, ups and downs again, kind of with the market. So ultimately, the higher cash position I have, the less that I'm going to be correlating to the actual market, and which is what I want. So that's kind of the goals going forward in the coming months is to get higher cash, and then have less correlation and have less, reliance on the market to essentially have a green week in the portfolio. Again, for long-term investing, different story. But if you're trying to be short-term or you're trying to trade more actively, then I think you want to have more say essentially in your P&L, right? PayPal pre-pandemic levels. Here's the thing. I grabbed it luckily, right? 2 days ago, I think on the stream Wednesday, I had calls. I sold one. I had one in my Robinhood portfolio, and I had one in my in here, I believe, in this Webull portfolio. I sold the Webull portfolio call. Luckily, I did, because it was green by like 30-40%. And then the Robinhood one essentially expired. Where I got out of it today. Expired worthless, but it is what it is. I played a little bit out of the money play, so looking for a bounce back. We didn't really get it. Facebook, by the way, did have a nice bounce today. If I'm not mistaken, Meta. Look at this. It did dip pretty hard today. It dipped down to 230. And then after 230, this thing went on a run. I mean, this thing popped from the lows today up to 242, a 5% move on Facebook. Now, yeah, it moved 20% after earnings, so I get it. But the thing popped pretty nice. It's trending pretty nicely today. So if the market closes pretty strong, I'd imagine Facebook tries to get up back towards the high of the day. And we'll see if it gets a run towards there. But Facebook's one that, look at where it's at. It's underneath this key area of support that you really saw in 2020. So it's under that level. It's pretty important. And I believe the 250-ish area is going to be your resistance for now on Facebook. But strong market, we can see, some upside. And this could be a crazy play too. If the market gets really, really strong in the next couple of months, again, that's obviously risky either way, right? But, look at this gap to fill, back up here, back up into the mid twos. There's a 20% gap. I mean, this thing has room back to the upside if it wants to gain momentum, and maybe the narrative changes, and we'll see. But all right, I want to pull up the jobs report here in a second. Good time to just hold crypto. I like to buy when things are extreme fear. Yeah, exactly. That's kind of how I see it. I still believe potentially we'll get some lower numbers on Bitcoin, Ethereum. Maybe not right now, in a few months, maybe in a year, maybe in 2. I don't know. I think we'll get lower numbers on that eventually. And so if we do see a pretty big move, if the market's strong and we get a big move in crypto the next few months, I'll probably sell a little bit and then hold what I have. It's earning interest in whatever, portfolios you guys have. You should hopefully have it in, a place where it's earning some interest these days. And that helps at least with the downside protection, or to some degree. And then on the same front, right? If we get some lower, moves, then I'll look to start buying it then. You want to buy it when people are fearful and all that stuff. And when everybody is on CNBC and they're interviewing everybody with the, Bitcoin's worthless and all that stuff, then that's where I'm kind of interested. It is crazy though to think about too. I've been seeing some stuff now. Again, it's part of the narrative of if you're against crypto and you're like Bitcoin's worthless and you're all over this stuff. I just saw some articles and whatnot. But all those athletes that took Bitcoin as their salary, or they wanted to get paid in Bitcoin, it's kind of crazy because a lot of that happened. The football season, we kind of saw a lot of that stuff coming out preseason and whatever. But if you just think about that, right, over the past couple of months, if that's what you're getting paid in, you're down a lot from what you're getting paid, and you're talking millions of dollars in salary. You're losing a lot. That's a lot of money. So it's pretty volatile. But I guess a lot of those guys have other contracts and they have other brand deals. They have other stuff going on. So, right, who cares if they're getting paid in Bitcoin and they're not really touching that money, and then let it sit, and they're ideally looking to build generational wealth with that. So I get both sides of that, but it's kind of my take on crypto and Bitcoin, at least as of right now. What do you think about holding Snap? If you bought it, personally right now, I'm not a huge fan of buying it after the move. If you bought the fear though, after Facebook's earnings, I mean, you're looking really, really nice, or at least you added to a position. That was the time to do it. Someone asked me about Amazon, same thing. Amazon, I go, should I get into Amazon now? Because earnings were good and whatnot. Again, right, we're right back into just on the bottom of this trend of this channel. So that's resistance right now on Amazon. And if you liked Amazon, I understand, you want to wait for earnings to get a better feel for things. But for some of these companies, I think it's pretty, I don't want to say it's easy. You never know how they're doing, with the earnings. It's earnings, they're just a lottery, right? At the end of the day at times. But if you like the company, right, and you believe in the longevity of these companies, then why wouldn't you want to buy these things at a 10, 20, 30% discount intraday or on a day just off of somebody else's overreaction? So that's kind of how I see it personally. Like yeah, sure. You can go ahead, but you're again, on Amazon, you're paying 15% more than you were yesterday. So, just understand that. And same with Snapchat. Again, if you're buying it now, you're paying 60% more than what you could have paid yesterday. So it's like, I wouldn't be loading the boat, but if you like them and you think there's more room in the upside for both of them, sure, take a stab. And if you're intending to hold it longer term, take a stab if you want to play it, but have some sort of, I don't know, strategic approach, or just don't worry about it, forget about it, and it's a long-term investment, and that's it. If that's how you're going to do it. Personally, thoughts on RIVN, Rivian. Let's take a look at Rivian. This is actually, it should be doing nice today, right? It's up 2%. I'm not a huge fan. I personally would like this stock more to the downside, but it's come down a lot. And if this thing definitely has range, EV's got to heat up though. So right now we've kind of seen Tesla, Lucid pull back a little bit the past couple of days and weeks. EVs are, let's see, right now as we speak, $59 or so. That's your support. 59 is kind of a double bottom here from yesterday and today. 59 is our support for now. Below that, $50. Let's take a look at the 1 hour chart, see if we get a different kind of look on this guy. So yes, it's holding 59 for now. As long as that holds, this has room up. If the market wants to stay strong, this has room up, and it could be back up in the 70s pretty soon. If not, we get weakness. This thing is coming back down, and I would imagine back into the 50s and back into the potentially sub 50. So this is one that I like this play. I've been saying I feel like for a while too. It's a good idea, and it has been great. if you want to hedge against the market or you want to hedge downside, and we're up at highs and Rivian gets back up into the upper 80s, 90s, it's up towards $100 at some point in the future. Personally, I'm not a huge fan of buying them right now. We really don't know much about them at the end of the day, right? We need a lot more earnings, a lot more history to kind of go through before I be comfortable with a better feel for it. This is my take at least. But I like it is okay if you want to hedge the downside of the market. If we see some growth sell-offs, some tech sell-offs, and we get some weight on those names, in the future, which it's been, NASDAQ has been up and down. So when we get some rebound days, it's up nice. When we get some weekdays, it's down the most. This could be a great hedge. So grabbing puts on this guy to hedge yourself is good, kind of to make sure your downside is protected, and usually they'll do pretty well if we get a pullback day. That's at least how I see it. Bought around $40 on Snapchat, still negative, was down 40, now I'm down 6. That's pretty good. Honestly, that's it's pretty crazy to think about. Obviously, if you're so worried about ups and downs, right, it's mentally draining. I can feel that, I understand. But realistically, again, right, if you bought at $40, you were down big. You had no reason to sell fundamentally. You say, hey, this is going to be around the long term. I like it, blah, blah, blah. I'm not going to sell, or I'm going to buy more or whatever. And now look at this. You're back to almost even and you're feeling pretty good. So it's like, really, again, the noise. It's fun. It's fun to talk about. It's fun to see, but it's really terrible if you're trying to actively manage and trade long-term holdings and positions. But Snapchat after today, man, I mean, honestly, this looks like it's just, and today's morning move seems like it really confirmed that. Trapping shorts, like it was like an obvious short in the after hours yesterday. And we were talking about, hey, like, look at this thing. If it's kind of getting up to the highs that we saw earlier this week, this could be a good short. And it had a little resistance right there. Then it blasted through and it kind of trapped shorts. And same thing today. It pulled back. But where did it pull back to? It pulled back right into range. So let's just draw this little box right into range of the highs from earlier this week. And it bounced and it's just trending up all day. Beautiful move. And it's probably going to squeeze out. It can squeeze out more, maybe go to $50 next week if the market's nice. I mean, I wouldn't be surprised. So you kind of have Snapchat seems like it's almost like a short squeezer, but it's a large cap, right? What's the market cap is $63 billion, almost $64 billion. I mean, that's pretty nuts. GGPI, I don't know much about them. Let's say the chart, at least they're probably getting hit pretty hard, right? Well, they're up almost 1% today. Yeah, I'm not sure I don't know enough about them personally. Although this chart, technically, obviously, there's not too much history to go off of. But technically speaking, right, we're right in this range right here. If we can hold $10, this could give us some room up. So, I mean, I kind of like that chart with $10 being that, risk level. And obviously with SPACs, that's kind of the deal. But a lot of these SPACs, you see them going, sub or after mergers and whatnot. You see these things, dropping off to $5, $4, $3, even $2 post SPAC days or post, after their, all that stuff. So I don't want to say it's a crapshoot, but it's kind of like, the chart looks good now. If this just doesn't get any volume, no attention, it's going to just sit there and it easily can sell off more. So personally, probably not a huge fan right now, but that's just me. I also don't know, very much about them. So SPY is pushing up into the close here. We're actually almost at 452. We might hit 453 today, for all we know, right? Back up to the highs that we saw yesterday. 453. That would be that. That's a pretty good run. We could get there though. Look at the move we made today. We can get there. So that's crazy. I bought these 455 calls. I only was going to get more if we had more downside today, but I bought them like at some point, not the absolute bottom, but some point back in here when we were kind of testing the lows of pre-market. I was like, hey, this could be a good bounce zone. We're right at the top of my zone that I want to start buying these in, that I want to go long in. And I bought one. I bought a 455 out to mid-February. I was like, okay, it's kind of kind of far out. It's like $10 out of the money. It's pretty far out. It's kind of risky, but if we get a big move, these should move pretty nice. And little did I realize this was going to go green, or this was going to go potentially almost in the money in the same day, which is nuts. SPY has seemingly done that, at least from my experience the past couple of weeks. When you feel like, oh, this contract is pretty far out of the money, this target may be pretty far out of the money, or from where we are right now, it seems to kind of, against all odds, hit some crazy levels up or down. You don't think, oh, there's no way we can't drop 20 points on SPY. Yeah, we can. We did that last week. We dropped 20 points on SPY in a day. There's no way we can go up 20 points in a day, or we can't go up 10 points in a day. Yeah, we did. Now we're up 5. We're up $5 today on SPY, and maybe we want to go for more. So you see how crazy it is. Definitely not as crazy as last week, but today's pretty crazy range. Let's be honest. We were down pretty good, and now we're up over 1%. So here we are. Let's look at NEO. I'm gonna dive in NEO. A GGPI is back for electric car make poster. Yeah, I know. I've heard of the company. I just don't know honestly enough about I haven't dove deep into them or know too much about them, to be honest. But I have heard of them. Nice SPY calls. I mean, I want to say I got lucky again, right? Luck to a degree with the reversal, but again, it was calculated. It wasn't it was calculated. I mean, the SPY calls, I had this zone drawn out from last week that I wanted to start buying SPY calls in this zone, and you never know if you're going to get deeper into the zone or not. It's kind of, who knows, but I had that I won't say conviction, but I felt pretty good about us going back up from where we are this morning, into next week. I felt pretty good about that into next week, because a lot of the earnings are out of the way. A lot of the huge weights in the S&P, in the NASDAQ, right? They're out of the way. So these big name companies report their earnings. And now after Amazon, I felt a lot more comfortable that, hey, that a lot of the questions and a lot of the, oh my gosh, this and that, there's a lot less uncertainty in that front, right? And earnings season was one of those things. Okay, are these companies going to just tank? Are they going to meet earnings? Are they going to beat? What are they going to do? And now that we kind of have a better feel for that, I feel like we could be back into floating higher mode, and we can easily, right, clear out this week's highs next week, where we can even do that tomorrow. I mean, on Monday, it's very possible. So we'll see how that plays out. But let's see. Okay, I want to go back to the where is it? Let's pull up the jobs. So the jobs report payrolls show surprisingly powerful gain of 467,000 in January, despite Omicron surge. So essentially, the reason why initially the reaction to this was negative, right? At the time, the market pulled back. Now the market, well, I think futures, I saw when this came out at 7:30 my time, 8:30 Eastern time. This comes out and the market was flat, roughly, right? Futures were flat, and because they had been up and they gave a lot of that back, and then they kind of were flat, and then they tanked. We were down about 1/4 to 0.5%, not tanked, I guess, down 1/4 to 0.5% after this report. And the reason why is because you kind of have a situation where if jobs report comes in good and people feel that these numbers are good, wages were up 0.7%, and they're up 5.7% for the year. With these numbers, people feel like, okay, the economy's doing better, potentially. Now, there's a lot of, I guess, crossing of that, and there's a lot of stuff that can go on behind the scenes, and it's more complicated than this. But generally speaking, economy's doing better. Fed's going to have to raise rates, right? If the economy's not doing as good, Fed may go, we're actually not going to raise rates come March, right? So, no, they're probably going to do it this year, right, obviously, but I saw a thing on CNBC when I was at the gym today that the expectation is, or the percentage chance of the Fed raising rates for March is 100%. They literally have 100% for March. Now, obviously, that's sentiment right now. So sentiment right now is they're going to raise rates. And after this report, I think people are like, yeah, they're going to raise rates. So the question now is what happens over the next couple months? Does the economy actually weaken or whatnot? And then does the Fed raise rates? That's the question now. Of course, we believe they will, but if they don't, right? What happens? The market will probably rip face. The thing will go nuts. Well, but if they do, we kind of expect it anyway. So you see how the uncertainty kind of aspect of things, when you have it and you're like, oh my, this is new, right? We're gonna raise rates. The first time we kind of started to get a feel for that a few months back, and it was like, okay, it's real, it's coming now. How everyone kind of reacts, and then you kind of know what's gonna happen, and then you kind of see that you get to those points, and it's like, okay, well, they're going to raise. Now, if they raise more than we thought, then okay, then that's where the market probably tanks in March. But if they don't raise, the market rips, and if they raise, we may be flat. I mean, we may just because we expected it anyway. So who knows? So it's one of those situations. But that's what we kind of got from the jobs report off of that. And so we go back to SPY. By the way, is up almost 1.25%. So we're ripping it right now. But here it is, right? So roughly. Yeah, it was this candle right here. We're roughly flat, and we're at 447 on SPY. report comes out in that 5-minute span from 447, we go down to 444. So a $3 drop in SPY like that off that report. So pretty wild stuff. But yeah, that was the reaction. A bigger picture, right? That's a little blip, I guess, in the bigger picture of today's move. But yeah, those calls are nice. Man, of course, in hindsight, you would love to get more. But I have these at look at the grind today. I had these at 326. The lows of the day were at 295. So I was pretty close to the lows on these guys. And now they're at $5. Would love to have gotten more, but sometimes it doesn't work out. I'm realistically looking back, like I was saying earlier, realistically, I would have loved to get QQQ, and it was in a better zone that I liked on the Qs. So I probably would have felt more comfortable buying, 2 or so of these contracts at this point, rather than just getting one of the SPYs. But it is what it is. It is what it is. SQ, let's take a look at SQ. A little insight from the pops. Let's see. All right, we got SQ. Look at SQ. We got lows, hit new lows today. Dropped just under $100. SQ, that's actually an interesting stock. Think about it. There you go. So look at that. So we're down here at $100. We kind of got that low. We just made new lows today, and then this thing could pop back up towards 130, 125 area in a 2-day span. So those calls could go juicy next week. I kind of like that idea. I got SPY calls, so I feel I'm fine with what I got, but that's a good idea, honestly. What do you think of for PFE next week? Well, I haven't taken a look at PFE. Let's take a look at Pfizer. I'm curious about how mRNA is too. Well, look at Pfizer. Look at that. Let's get rid of some of these because we kind of can, time has moved on. We're holding at the 5250 area. So here's my little mini, very small zone, but 5250 is holding up. So we're at 53.30. This could be setting up. And here's your downtrend on Pfizer. Look at that. Pretty nice. It's a pretty nice downtrend. It's pretty clean. You got 1, 2, almost a third touch there. 3, 4 almost candles there. The hit. So this is actually a really nice setup, honestly, for a breakout. So we got up over 53, over 54, and then we hold up. On Pfizer, this could make a little pop up into the mid to upper 50s. Very, very possible there on PFE. I don't know how the narrative, though, for vaccines and how, Pfizer is doing. Obviously, a rising tide will lift a lot of boats in this case, right, with the overall market being up. That's probably helpful. But I'm curious because we're seeing some mandates being taken down and slowed down in other countries. I guess is it not necessarily vaccine mandates, more like mask mandates and stuff like that. So I don't know. mRNA, it's mRNA. Look at this thing. It's gotten destroyed. We talked about this thing. It's nuts. Looking back, I wanted to short this thing, and I did once or twice. But looking back, you have a conviction on a short. This thing is going parabolic. It's very difficult when it's going parabolic to short a lot of these stocks. But if you had that bigger picture view on this thing, you didn't have to get the top. If you averaged in a short at $400. Obviously, you're up big. You're up over 50%. Let's say, you took some profits. You can be up pretty nice on that short. So I'm looking at this. I want to see some more of this. Now, we're to get comfortable shorting again on some bigger names in terms of either buying or just going short or just buying puts with some time. Probably going short on some names, honestly, if I'm going to do it that way. Yeah, a little safer. But I want to start seeing some more of these parabolic moves. Right now, we're not getting that. We're getting a lot of fear. Things are going down. If you do want to look for something like that, actually, you'll find it in ExxonMobil. ExxonMobil, by the way, is up, and look at this thing. It's going parabolic. Now, this could easily pop and squeeze to $100, and who knows? But if you believe that oil is coming down in the near future, oil has gone, look at this, since the year has begun, right? Oil has gone straight up. ExxonMobil has gone up 35%. Now, it's a risky play because you'd be shorting it into these, extensions at highs at the all-time high, or not all-time highs, up towards the highs. But if here's the weekly chart, guys, on ExxonMobil, this is where I start to get very interested in this as an idea for a short or puts, next week or the week after that. Here's rough. It kind of had this rough downtrend. It's kind of not perfect, but if you just roughly were to draw in a box, right, this is the weekly chart. We have now got up into this resistance zone, which each time we got up here, we've come back. And once we get up over $80, we've come back down to 75 pretty much every time since 2014. okay? Go back into, so if you were looking for a short against oil, you could look to, you can have short oil a bunch of different ways, or you could go ahead and short ExxonMobil. And, I would probably go with just shorting shares at this point in the game, because you're going to play options if you're able to time the move of when it's going to happen. But a shorting of shares, right, is 6 to 10% back to 75 roughly. So it's not terrible, but that's kind of an idea that I would have. So again, that's one of those charts that looks very, very parabolic in a sense right now. That could be a better look for a short. If anything, I wouldn't be going. I'm not liking the longs here unless it's a day trade. Definitely not. Personally, at least. By the way, look at the market right now, just straight up. So we said, hey, we might hit 453. We literally are. Like we're back up to yesterday's highs. We're right up to yesterday's highs, and 453 is only 50 cents away. So we're looking pretty nice on this. Pretty nice. Let's see. Everything's pushing here. I'm going to check on a couple stocks and sectors here. Let's go look at the Jets ETF. Airlines, it's down. Man, it's come back. It was down. I have a hunch. I think oil is pulling on this stuff. Fuel prices are pulling on this stuff. So again, airlines, right? The recovery play, I like it. I think the narrative has definitely made a pretty big shift from restrictions and whatnot and stuff. And so that narrative shift on that front is going to be very, very beneficial to the airlines. With the market being, strong, that will help as well. But you kind of need to see oil pull back. You got to see that. If that pulls back, that's good. So with oil pushing up, that's going to be a downside pressure on the airlines. But that said, I'm looking at some mines. So I have JetBlue, which has gone green today. That's nice looking at that. But again, JetBlue, here's the downtrend. Actually, let's draw a downtrend line. JetBlue's downtrend this past week is right here. We're right at it. So if you were looking for an opportunity, puts right now for an intraday, last 45 minutes of the day could be a trade idea. Or, we break this downtrend and we go for a bigger move into next week. We'll see. But that's one that I like a lot. It bounced right off $14, which is a key area that I've had drawn out for months. So it bounced right off of 14. You can see these key areas are actually useful. And it's back up to 14.50 intraday, which is nice. Let's see my Spirit. Spirit is, it's up too. So my airlines are up. I think American must be down, I'm guessing. That's probably got it. Yeah, American's down. It's got a bigger weight in jets, I believe. Let's see, Delta. They're all coming back, though. Delta's up a little bit. United, UAL. United is down a little bit. But, yeah, they're all roughly around even on the day. Let's take a look at XBI. Biotech sector right here. XBI up 2.25%. It's pretty good. XBI looks like it wants to go for a bigger move into the close, which I got my LABUs. These are just kind of doing their thing. I got no reason to sell these guys, and I've been trading around the core size. So this is now potentially putting in that inverse head and shoulders. Take a look at this. If you draw a head and shoulders chart, here's your left shoulder, here's your head, that lower low, and here's your potential right shoulder. This could be looking for a bigger move back up into the 20s next week with a strong market. I'm just looking at this big picture view. These are up 6% today, though. This is going to be, this is the 3X ETF for biotechs. It's risk, total risky play here, but I think we're going to get a bigger move coming on biotechs, personally, in the coming weeks and months. That's me. So again, these things kind of dip down. I've been adding, and then when we get some nice days, this thing pops up over $20, I take a contract off, and the thing pulls back. I add a contract, I take one off. That's kind of what I've been doing the past week and a half now, roughly. I really want to buy X on, but I think it's too late. Yeah, I personally, it's up at resistance. I don't want to buy. And this has been nuts, because if you bought the fear or the pandemic lows of this guy, right, you got paid a fat dividend along the way. You got paid a fat dividend, plus the stock has been blowing up from those lows. You're killing it, right? So again, on this type of stock, I wouldn't be. This may be a signal of what's to come, but in the short term, it's just getting a little overextended for me. It's just not something I'd be a huge fan of buying into this right now. If anything, I'd be shorting it. Let's see. What else is going on? My small caps here. We got two greens. We got one pretty much even, one a little bit red. That's really it. Oh yeah, Mesa. This has been one of the small cap airline play that we've been kind of looking at. It got downgraded today, which is kind of why it's down. But it's come back and recovered pretty good. So I got those $5 calls out to July. So we got time on those, and we'll see how this one plays out. I still liked it. I have no reason to dump this with the airline, really, with the airline strength. So I'm going to leave that guy on there. But I have a couple calls there. Nothing crazy. Nothing that's not going to make a huge dent or make a huge move in the portfolio. So it is what it is. Thoughts on Zev? That's Lightning E-Motors, right? Zev, Lightning E-Motors. I knew that name. Let's take a look. Chart-wise, this is potentially bottomed out. Yesterday, it must have got some news yesterday. It popped up, right? 25 million shares traded yesterday. This could be actually really good. Risk $4, so risking 68 cents or so. But tons of volume yesterday. It popped up over 5. Now it's right back, but it put a higher low in compared to the prior couple of days. Right here at like 425. So actually 425 could be your risk level. Risk 425 on this guy. So risking yourself less than 50 cents for a move. I'd be looking up towards the 50 SMA. That's been resistance in the past. So that's up towards almost $6. So risk yourself less than 50 cents down to 425 for a move to 6 or for a move to 550 plus back to the highs of yesterday. That's pretty good in my opinion. About $1, essentially a 2-to-1 ratio, right? You're looking for $1, and you're going to risk 50 cents or so, roughly. Yeah, one of my small caps went green there. So let's look at I'm looking at DraftKings. Let's take a look at this. Oh wow, it's up 6%. DraftKings is actually pretty interesting because it had a little pullback past 2 days, but it had a nice bounce off the bottom and bounced off the 17s area that it hit. And it came back and it pretty much held up over $20. So holding $20 is a good sign for DraftKings. I think Penn was down actually today. It's still down. Penn's a little bit weak. They announced a $750 million buyback program for their stock through 2025. I love it. I have 2023 calls at the 50 strike. I love it personally, but again, right, it's kind of one of those volatile names. It's going to be playing around with tech and growth and stuff. They had earnings. I think they missed on EPS, but everything else, in my opinion, I liked from the earnings. They have a ton of cash. They're not spending tons of money and just dumping money endlessly into marketing for this space. They have that taken care of in other methods, social media promotions and whatnot. And so I like their essentially their approach or their handle on the space in the market right now because it's a little bit more of a unique spin. And a lot of these companies are dumping so much money into paid advertising, which Penn is not doing for their sportsbook and sports betting platforms. They're not doing that. Like you look on TV and DraftKings is spending so much money. Now, everyone knows DraftKings if you're into sports because you've seen the ads. But realistically, it's actually pretty hard on the pockets. It's not very profitable, at least as of right now, to be spending so much money on those ads. So that's what I like Penn's approach there, and I like that play. If I had to pick one of the two, right? That's why I've been liking Penn for a while. DraftKings could be calls for this. Yeah, I mean, that's very true. With the Super Bowl coming up, these could be nice. So DraftKings, let's see where Penn, I think up to 52 is your resistance, and it kind of got there yesterday off the earnings report news, and the market didn't help. It pulled right back. But $52 is resistance on Penn. DKNG, let's look at DraftKings. This, I'm looking up here towards like 26, 27-ish area for a pop on DraftKings. That could be a really nice move. Again, you don't realize that from where we are right now, the stock is down so much that a move to that level is a 25% move, roughly, up towards the 27 area. It's pretty nice. So if DraftKings can hold $20, I think a move to 27 is very realistic in the coming weeks if the market stays fairly strong. Let's see. Yeah, I mean, the sports, the narrative of I like the idea, and it's fun to think about, like, okay, what's going on, big picture events, and how that's going to affect some of these stocks. But I don't get too caught up in that. Say, these stocks have to go up because Super Bowl. Like, no, I've been in plenty of situations where that's exactly the opposite of the case. So it really depends. At least for right now, we're just from my field, we're not in a stock picking environment very much, and we need something to happen to change that. So maybe that's crypto stocks that start popping up off of bottoms because Bitcoin's moving, but we got to get something to change that. And so it's right now, it's pretty much everything is just like up and down with the market. It's really what it feels like. Market's up today, everything's up. Growth and tech, they're up more than value, right? And it's kind of like that's the feel. So it's just been a little I don't know, it's been a little just been choppy and it's kind of annoying and boring, because I think we all enjoy when we can kind of pick individual stocks and kind of utilize, right, technicals, utilize fundamentals, and utilize trends, utilize those sector plays and what's getting hot and rotations like that. That's a lot of fun when the market gets into those kind of rotations. It's a lot of fun, but it seemed like we haven't really gotten a continuation like that for, a while. But that's part of the game. All right, so we're up over 61% of stocks are advancing today, 34% declining. 500 stocks hit new lows. Now, a lot of stocks did hit new lows early and then have bounced back. For example, if you go back and look at SQ, Square or Block, I guess they're changed their name to Block. But Square, right, this thing hit new lows this morning and then has bounced back 8% up. So you kind of I feel like a lot of that type of stuff is going on across the board with these new lows versus new highs. So, I guess take it with a grain of salt. 50 SMA, 25% of stocks are above their 50 SMA, 28% above the 200. So, that's nothing crazy. Once we start getting over 50% of stocks above the 50, then I'm feeling pretty good about momentum to the upside again. But obviously, right, from here, if we get from here to there, there'll be some really good moves in the process. It's very possible we keep getting rejected by the 50 SMAs and this number stays here or lower. But if this starts to trend higher, it's going to be really nice. At least it'll give us a better feel for what's actually happening in the market. In terms of top gainers versus top losers, so today we have today's slightly better, So if we look at this, yesterday we had the more interesting list was the top losers versus the top gainers. There was more stocks that had lost over 20% than stocks above 20%. Today, different story, but again, not by much. And it's funny because, we have a small cap in there. ANY is a small cap that's up a lot. But Snapchat leads the pack, and who would have thought that Snapchat would ever be the number one gainer on the day, right? Up 64%. I definitely wouldn't have guessed that personally, but here we are. Now, some other of these losers, RMED, look at this. This is kind of your example, though, of what I'm worried about for a lot of small caps. RMED, let's pull it up, RMED. I've traded the stock in the past, and the problem is that they did an offering today. I think they did like a 50-cent offering, something like that. I forget exactly where it was. But they did an offering. And the problem that you have here is that the thing is down 52%. And because the thing is, like, when these stocks have no volume, it's just like you do an offering, you're killing your stock, and you're going to have to do a reverse split, and whatnot. But these stocks, this is the risk market cap. The market cap on RMED right now apparently is 2.33 million. I think they did the offering, so that'll change. But I mean, these things are going to essentially worthless values. Like, we're absolutely worthless, like literally. So the problem is that you kind of keep pushing yourself so far down and no one wants to buy your stock. Well, what happens when you do the offerings and no one wants to buy, and then the thing keeps going lower? You can put yourself in a pretty tough spot to be able to raise capital in the future. And then next thing you know, right, you're going bankrupt. So this is a pretty big danger for a lot of these small caps and penny stocks specifically. And I think you're seeing it on RMED today, down 52%. And who knows, maybe it pops back, but definitely not a good look right there. Let's look at the stock really quick. I'm curious to see what the actual PR said. So let's see. They announces pricing of a $12 million offering. Underwritten public offering. Okay. They're putting up 9.5 million shares, priced at a public price, offering price at 50 cents per unit, with each unit consisting of one share of common stock, one warrant to purchase. Okay, great. So yeah, I mean, that's just a killer, man. That's an example, right, where, I mean, maybe this is potentially presents a dip buy opportunity, but for some sort of rebound back up to maybe 40 cents. I mean, maybe even potentially, do we dare ever see the offering price again? But I think everyone kind of has that speculation. This is they're going to probably have to do a reverse stock split, because where are they on are they on the NASDAQ? They're on the MX. So MX is interesting. It's kind of, you can have some weird runs on the MX stocks, but these things are probably going to end up doing a reverse stock split. This thing was nuts because this was a short squeezer back in June, and the thing went from 3 to 10. It was nuts back then. Then it popped again here in August. quickly, and then it's just been fading off ever since December. Mid-November on, man, this thing went from $3 to now if you're still holding this thing, you're down from 3 to sub 1 or sub 50 cents. Essentially worthless. But that's the problem that I think people need to be cautious of with their small caps, because if you're in 1 or 2 or 3 or 4, right, but you're in these stocks that need money, need cash, that's just the risk right now. Unfortunately, I know you don't want to sell the bottoms, but the risk right now is starting to become a little bit concerning, because you're going to see more stuff like this happening. So, not to mention eventually more delistings and bankruptcies. And then on the other side, there's the buyouts. So the quality names will get bought out, potentially, as they come down to very, very cheap valuations. But that's why you got to do your due diligence if you're going to hold these things down to these levels. What do you think about SPY? Okay, so SPY, I bought calls. Again, I quickly will talk about that play again. I had this little zone drawn in that I liked. So essentially I drew in last week's highs. Let's just zoom this in really quick. You draw in last week's highs to essentially where we are right now. And I had this zone right here from 440 to 444. I wanted to buy calls in this zone if we got that dip today. We just touched into the top of that range. I bought one call. I didn't buy any more because I wanted to average in. And I'm looking for a move back up into I think we can get 460 plus next week. Roughly 462 is my next level. So I'm looking to sell my call. If we hit 462, I'll take that short-term call off, and that's it. But I like this little move. It's looking really good. We're kind of breaking the downtrend. We're pushing back up. I think next week could be pretty nice. After earnings are kind of out of the way, so I think we should see less volatility next week. Again, anything can happen news-wise and whatever, but we should potentially see less volatility next week. So I like it. If we want to look at short-term, let's look at the 5-minute chart and see what it's doing. It's kind of flagging here. If it holds up around 150, 170, this thing, I think we can get that. I think we're going to get 453 today. 453 is very possible today on SPY if this holds up right here into the close. We got 30 minutes left. If it's very, very doable. It's pretty nuts to see that, like, on the top gainer list today, you look through, you got MicroStrategy. It's up 16%. So, pretty. It's like a $400 stock. It's not a cheap stock. You got, what is this? Snapchat as the number one gainer at $40, and then you have Bill here up. It's a $200 stock, up 40%. You got some pretty interesting action on the top gainer list today. I think Snapchat honestly could be setting up to squeeze out to $50 and maybe even more if it keeps going. It could be one of those, like, I don't want to say this thing could go be the new short squeeze stock, but based on today's move, I think it trapped a lot of shorts this morning, and it just has that feel, right, based on where it's sitting at. By the way, though, we're talking about NVOS, one of my small caps. We're talking about this guy a few minutes ago when we started live. How it hit 102. I mean, look at look at how sparse the volume is. At the open, if somebody wanted to dump and they had 500 shares and they market sold and there was no one to buy, then yeah, you're gonna this thing could come down pretty low. Which is why, honestly, if you really believe in a play like that, it's not a bad idea to have some bids set to kind of some ridiculous levels as good to cancel buys. Now, the risk is that there's some bad news that comes out and you're in and you don't want to buy. But if you're feeling pretty good about it and set some bids and you can kind of forget about it. And these might actually fill. Like, for example, today the thing hit 102. Somebody got shares at 102. Someone also got shares like, the one sub 115s, and now it just popped back up. Well, on very, very low volume, it popped back up to 121. So you see, like, someone actually just popped through about 7,000 shares a few minutes ago, half hour ago. But yeah, I mean, it's not that much volume, realistically. I'd want to see this thing actually catch volume and actually get, some momentum is the idea. But again, with some of these small caps, you're looking at, these are the charts you're looking at. This isn't a chart. Right? You're not in this thing because the chart. You're in this thing because you have other reasons. And that's why I'm in it. But, that's the thing with these bottom small caps is that they're just floating around and they're floating pretty low, especially these days. So Snapchat just broke $40, by the way. Look at that. Popped $40. Look at this trend. It's been such a strong trend. Look at that. That trend has been pretty nuts today, by the way. It's been just trending really since this morning. It had a little pop, pulled back, built higher lows, and just been trending all freaking day. what a great breakdown thing. I mean, it really is fairly straightforward. Hopefully it's helpful though. And the thing is, if I look at QQQ, by the way, NASDAQ 100, I mean, I like this chart better. I wish I took these instead. But looking at calls for this, look at this range from 357 down to 350, which 350, by the way, is the lows from October. Okay, that's why that line's there. And then 357 is the high of last week. So I just kind of like to just chart out some key levels. Also, if you kind of just draw the same range as SPY, it's very, very similar. I would have drawn a pretty similar, whether these lines were here or not, I would have drawn a pretty similar kind of zone. Pretty much coming down into the highs of last week. I would expect that to be support for at least a short-term bounce, maybe a more extended bounce. I believe a more extended bounce. That's also just me. So if you grabbed calls here in this situation, if you believe in a bigger move, then fine, hold for a bigger move, which is what I'm going to do. Hold for a bigger move, but you better not go red. So if next week we wake up and the market starts pulling back, well, guess what? I'm making sure that my stop loss is higher. So on those SPY calls that I got at 325 that are now worth 525, they're up 200 or $2 on the calls in the day. On that play alone, right? My stop loss now 350 to 4. I'm not gonna. I mean, realistically, I probably wouldn't want to hold that thing below $4. And then if it does drop below 4, I can cut it off at 4. I would have made 75 cents on the contract per contract, which is $75 per contract. I lock in $75 per contract, and if it comes lower, I can reposition or re-add and possibly get a lower price. And sometimes you get stopped out and then it ends up bouncing right there. And sometimes you don't, but you got to kind of manage your risk in some way. And that's kind of one way I like to do it. So that's what my plan for that. But QQQ ultimately would have been a really nice play as well. I mean, you can look at some of these options today. Let's look at some of these. Let's go out to like mid-Feb. Let's go out to the 18th. Like 360. Let's look at like 360 calls. These 360 calls, here's the chart of these guys today. This morning, these 360 calls actually dipped down to sub $5, and then they popped. Now they're up over $8. So that's pretty crazy. Intraday, I mean, you almost got a 100% move intraday on a call that expires in 2 weeks. That's killer because we're sitting up at that level right now on QQQ. So it's pretty cool to see that move. But yeah, Nasdaq's up almost 2.5%. S&P 1.25. We're flagging again. We want to go for more. It looks like we want that 453, maybe even 454, dare I say, before the end of the day. It looks like I mean, same thing happened last week, honestly. Look at what happened last Friday. If you go back to last Friday, it looked like, okay, like, whatever. And then all of a sudden, actually, this is Friday back here, the 28th. We kind of were trending up. And then that last, half hour, boom, we went from on SPY 435 to 441 in just a half hour. So, don't doubt the potential this thing could have into the close, which is pretty nuts, honestly. Pretty crazy. All right, let's see. I'm pulling up on the right-hand side. My LABUs are up a little bit. They're not honestly for how SPY is doing. They're not really doing. Yeah, they're up 6%. This is up 6%. It's pretty good. So XBI is kind of bouncing. This is looking like the more I see, the more I like. The volume is up over yesterday, which is good to see. So volume is still elevated here on LABU, which is a 3X biotech ETF. This is setting up the more. I think we can get a 50 SMA touch, $30. I think we're going to get that. We could go more, but for essentially, if XBI pops $1, this goes $3. So if we look at XBI today, roughly, I mean, not like that. I mean, 1%, then this goes through. So, okay, XBI is up 2.5%, then essentially that's going to be up 3x that. They're not the same price, which would be completely screwed up. So XBI though, I mean, XBI I think goes back up to hit 95. That's where it is now. I think we can get up to $100. I think 105. Realistically, 105 lines up with these lows right here at 107, 50 SMA, 106. Like, I think 105 is a realistic spot on XBI based on how oversold this is for a bounce back if the market stays like decently strong. But I think what happened is this week may have been the opportunity to kind of shake out a lot of uncertainty in terms of earnings season. So the earnings uncertainty gets shaken out, and then I think we could be setting up for at least a little run the next couple of days. I mean, next couple of weeks, I think going into the March Fed meeting, unless we get some other news. So I'm kind of hoping. I'm kind of looking forward to things to kind of slow down a little bit in terms of volatility so we get a better feel for trends. And also, you notice too that maybe that helps small caps a little bit. Maybe you have a little bit of a window here for small caps to heat up. Maybe a sector gets hot. Maybe it's Bitcoin. Maybe it's crypto, NFTs, like something like that pops and gets hot. There's so many stocks out there that have ties to Bitcoin, crypto, NFTs that we can go find at absolute rock bottom prices for really good risk rewards if they become a sympathy player or mover. So we haven't had a reason to do that yet, but based off today, NE is up a good bit. BT is popping a little bit. We're starting to get maybe something starting to move a little bit. Now, of course, over the weekend, the risk of that is that what if Bitcoin crashes? Yeah, I mean, crashes or pulls back, then those stocks probably take a dip, come Monday. But it's something to be at least thinking about. At least that's what I'm thinking about going forward. Next week, though, I also will be, I'll be in Montana. So I'm probably not going to be able, definitely not going to be able to do the market close live streams, but I'll be trying to do, we'll probably do live streams at night and whatnot. We'll see. Just some brief stuff, at least what I want to do next week. And I think that they're honestly more time effective because there's no like needing to edit or any of that stuff. It's just more like, come on, talk about what's happening. We can see stuff live. If I take a position or if I do something, then I can talk through what I'm doing. And that's helpful. Hopefully, it's a lot, I think, a lot better than traditional videos. But again, there's a time and place for everything. So that said, let's look at some stocks here. Unity Software. Unity is actually back up to the range that we saw a couple of days ago. 110, 111 is key on Unity. Over 111, this thing pops pretty quick up into the 115 area, I'm guessing, based on how it's looking right there. Volume is nice here on Unity as well. Thing was at 210. Now, obviously, that was up a lot, but it was at 210. Now it's at 90. I mean, I think about it too, right? If you are in these stocks from way higher, yeah, it hurts to hold them down and whatnot, right? If you're in these stocks from like way, way higher. But if you aren't, you're looking at some of these stocks that are down, 50%, 70% from their highs. And you're like, hey, if we regain even just a quarter of the move, that's a nice move for me, right? So if you're looking at Unity and you're saying to yourself, hey, well, if we just get back up to 140 or 135, let's just go to 135. If we get to 135 from here, it's a 22% move, almost 25% move. It's pretty good, pretty darn good, right? And that could happen in a pretty short period of time if the market holds up and bounces. So, obviously, having already been in, it hurts. That's why I think it's really mentally draining to be honest, in this market environment right now, to be swinging, which, that's part of what I am doing, but it's mentally draining, and it's good to, I guess it's good for experience, and it's good to kind of see how things go, but it definitely would have been, looking back, hindsight, I would have loved to have been thinner on swings, go back 6 months, but who knows, who knew, exactly what was going to happen 6 months ago. So that's part of the game. That's right. Part of the game. All right. So where the jobs are, let's take a look at this. Where the jobs are in one chart. So after the jobs report comes out, all that good stuff. We talked about that earlier. And how that actually, technically speaking, is bad, or at least the market took that as a bad thing, because then you fear of more rate hikes. Economy's doing better, Fed's got a raise, and if the economy's doing worse, the Fed might walk themselves back and say, wait, we're not going to raise in March, right? So that's the idea. That's kind of the two camps of thought. Now, I think we all pretty much agree rates are going up in March, but there's been some talk the past week and a half, like, wait a second, it's possible, that's the idea, we'll see, but we're starting to get some talk, which when you go back a couple of weeks, we're raising rates. That's it. It's going to happen in January, right? And then that didn't happen, obviously, but that would have been a surprise. But you see how things can change very fast. Okay, January jobs, 1 month net change. This is kind of cool too, just because leisure and hospitality, right? You think of hotels and you think about like more leisure travel. You got to get back into that thought process, right? A lot of jobs being added there. And that kind of, again, aligns really, really well with the airline trade idea. That's my whole idea right here, is one of my biggest heaviest weights in the portfolio right now for 2022. I still have no reason to jump ship on that. So again, right, we're seeing more jobs lining up there, which is good because a lot of these companies, airline-wise, that's been one of the struggles. They had to cancel flights, not only because of virus surges, but because they don't have any people to work. People didn't want to work. They were sick, or they're kind of lagging behind rehiring after not having this much demand. Now they got so much demand for flights, we can't keep up. We don't have enough people to hold up. And so you kind of see how that went, and how that's going. And then there was some choppiness, a lot of choppiness there. But that's when we're seeing some big moves in the job report. So that's kind of cool. Government up 23,000 jobs. Wholesale trade, construction, mining, and logging. Okay, look at that. Mining and logging. Construction down, or the down, I guess, sectors. Financial activities, manufacturing, healthcare, and social assistance, all up. Transportation and warehousing is up a good bit. Retail trade, professional and business services up a lot too. Okay, that's kind of cool. I think the leisure and hospitality is really, really interesting if you're looking for some trade ideas. I'm curious. Let's look at Finviz and see if I wonder if they gotta have like sector. Can we get a sector from that? Is there a sector list that we can go off of there? Let's see. Let's see, industry. Maybe we can go to like industry and see if we can find some more stocks in that space. I know there's a bunch. Airports, air services, airlines. We don't want that. We would want like some hotels and stuff like that. Let's look at like for hotels, if we can find something like that on Finviz. We have health, home improvement. Want like hospitality is what you want. Let's look if I can pull up like hotel. Let's just look at like a search. Look for like a search term. Hotel ETF. Let's look at beds. That could actually be an interesting stock. Bed, BEDZ ETF. Let's see if we can pull it up here and find what stocks are in it. It's kind of cool. The ETF could be a good idea as well. For the recovery, again, we've been talking about the recovery trade or the airline trade, right? And the job report essentially can align you really, really nice. We want to see where the portfolio is allocated is what I want to see. Okay, so this is kind of cool. They have mostly North America, a little bit in the UK, and then Latin America. They have a lot of small caps, some mids and some large, but a lot of small caps there. That's probably been hurting as of late. So, okay, here we go. Here's the stock ticker. Blue Green Vacation Holdings, Choice Hotels, Golden Entertainment, Hilton. We have Intercontinental, Wyndham Hotels. Okay, so we got some good. We got some stocks to look at. So right there, boom. And there's more where that came from. But here are the heaviest weights. So BVH, Blue Green Vacation Holdings, BBH. Now, obviously, if we had a bigger, this has actually done pretty well since last summer, actually, but it's kind of holding up as we speak right now. This is kind of how, this is one of those ways that you can kind of just stop trading freaking, whatever, like Facebook and Tesla, and just go and you see a jobs report like that, boom, you see these stats, like, wait a second, they're hiring. That's probably a good sign. That means they're either expecting more or they're getting more demand. And then you can back your way into finding some stocks that might be setting up really nice. So boom, BVH, Blue Green Vacation Holdings. I want to look a little more into them, obviously, first off. But under $30, they're actually holding up pretty nice around 28, risking, $27.50 for a move back up to the top of the channel, which is up into the upper 30s. A $10 possible move with a risk of 50 cents on this type of stock. I mean, come on, that's really good risk reward. So you can find, and hey, this is the quiet stuff, the quiet names, but hey, you're not going to see the crazy swings up and down. It's not going to be a biotech, or, you're not going to be playing, SPY options for next week, right? But if you bought yourself some time or just bought some shares and you're looking to trade this thing in a swing idea from sub 30 up to the mid to upper 30s, let's just do the math on that. BVH. By the way, SPY is pulling back. We're going to take a look at the chart here in a second. Yeah, look at that. I mean, it's holding up really, really well. If this thing pops back up towards those highs, it's 30%. It's pretty darn nice. Pretty darn nice, in my opinion, right? So finding, just backing your way into like a new trade idea or a sector is just, it doesn't take as long as people think. All right, Choice Hotels is CHH. I'm going to look at, I'll go to Webull. chart these things out better. Choice Hotels, yeah, pretty similar chart. Been grinding. I mean, look at here's the weekly chart on this thing. This is killing it, by the way. That's actually up a lot. I'm not sure I'm a huge fan unless I want to look in deeper into the earnings. They got a dividend here. Dividend 24 cents a share. Is that up or down from the last one? They upped the dividend, which is kind of crazy or kind of cool to see. But the strength has been there. So again, dips are getting bought up pretty nicely here on Choice Hotels. And we're seeing the actual job support reflect that. Okay, Gold Entertainment, Hilton. Let's look for like a Wyndham. Let's look at like Wyndham is one that I've heard of. WH. Let's just look at a couple charts. WH. Wyndham Hotels. There's one right behind me. We're literally on the street behind me. Again, trending really, really nice, holding the 200 SMA. So this thing is, chart's not the best just because I'm looking bigger picture on these things. They are up a lot, but the trend has been there. I mean, if you want to play the trend, these are trending really, really nice, despite the market being chop fast city. I mean, HGV is Hilton. Let's look at HGV, and this is the last one we look at. HGV. I mean, this is one where you can kind of just cancel. Oh, look at that. This is the weekly chart though. I'll go to the daily here. On the daily, look at very nice. Very nice. This is at the 200 SMA. So it's at the 200 moving average on the daily. This could be one that, again, springboards itself from here right back up into the mid 50s. 20% move on options could be killer, but again, it's going to be a slower mover. You're not going to have to go and panic sell and freak out about this and that. And you kind of backed your way into a growing sector in the market right now where we're seeing jobs, we're seeing, growth, and we're seeing it back your way into restrictions being, kind of cooled off in other countries. And you probably expect that to happen more and more here in the US. And then that just kind of fuels the travel, fuels the hotel trade, fuels all that stuff. I like that idea. All right, so here's SPY. Now, by the way, we have just pulled back into a pretty key area of resistance, now support, around 450. So we got up just shy of 453. Now we're at 450. So we pulled back a good bit on SPY. And here we are. So this is setting up for, if it closes right here into the close, it's not a bad day. It's closing at a pretty, nice area. If it holds above this level, it's a good sign. We'll see if that holds up. NASDAQ up just under 2%. Dow is up just about 0.25%. SPY up about 7.75. Also, potentially this rally being sold off, people taking some profits going into the weekend. People are like, I don't know if I trust the rally and whatnot. So I kind of make some sense to that idea. So it's kind of what we're seeing, at least as of right now, across the market, really. So that was kind of cool. This is a fun one to look into. I mean, obviously you can go for the ETF, BEDS, BEDZ. Let's look at that, by the way, too. BEDZ, and just buy the ETF. And then you have exposure across the board anyway. Fairly new ETF, by the way. Actually came out less than a year ago. Less volatility. If you pick and choose, you could make some more money depending upon how you play it. But yeah, I mean, you're down into like this level right here. You got some volume coming this week. So this pops back up towards the high end of the range. About a 10-15% move. Not terrible, but that's an ETF. That's possibly worth looking into if you like that idea and you didn't want to pick a stock specifically. You liked a bunch of those. Or you could pick a couple stocks and play, a one contract or, shares across each of them. Spread your money across 5 different stocks instead of playing the ETF, which kind of gets you exposure to a lot of stocks. Could do it that way too. I like the idea though. I do. With the market pulling back, let's take a look at Facebook. How is Facebook holding up? Oh, it's pulled back a good bit too. Look at that. Off those highs, it's pulled back. So it's actually ending up red here today. I mean, it's been pretty nuts, but it was green for a little bit. It was pretty red. And now it's back to, just borderline red, at least for now. Going to research BVH. Yeah, it's probably one that's, just looking at on that surface view, it's kind of cool. I mean, it's kind of cool. They had a little bit of volume today. They had 12,000 shares pop through and 7,000 right there. Volume wise, this thing is, has seen elevated volume, relatively speaking, really compared to last year. This time last year, we're elevated on volume. Stock's up a lot though. which is pretty cool. And now on this recent dip, it's getting bought up. These dips are all getting bought up right here in this range. So even if you just played it technically speaking, boom. And those dips, by the way, line up with the highs we saw back in here. So see how that works. See how, support becomes resistance, resistance becomes support. See how that stuff, how that funny stuff works. There you go. You're seeing it live right in front of you. Right in front of you right there. So right here, this 2750 was a resistance point for three. Look at these candles. 3 candles, 3 different days across about a 2-week span. Hit up to that level and got rejected. Eventually broke through. And now where we come down to? Same exact spot. That's support. Boom. Pretty cool. It's cool when it works out that nice. It doesn't always work out that nice, but it's cool when it's cool when it does. I will say that. All right, I'm kind of interested to see how the SPY handles the close because let's see. Yeah, it's hovering right around that 450 area for now into the close. A little more volatile, a little more volume coming in. Again, end of the week, you kind of get that little, pop or little pop in volume to finish things out. People position themselves for what they think is going to happen next week and how they want to handle it and whatever. But buyers did come in pretty strong today. I was kind of surprised. Really this morning I didn't think we'd be sitting up here, north of 450 on SPY towards the end of the now. We're just hovering around it. I didn't think we'd be north of 450 on SPY at any point today. If you were to ask me that, 5 hours ago, I didn't think it would be possible. No, not that it's not possible. It's possible, but I didn't think it was likely. What do you think of calls for SWK or shares for a pop back up? Let's take a look at SWK. Pulled back a good bit. Oh, it's right into an interesting spot too. Look at that. So it kind of has, let's look at the 1 hour chart. This probably has a, kind of. If we can hold today's lows, I like that. Today's lows were down to 166 or so, just under 166. If we don't hold today's lows, my speculation, we probably come down at least and maybe even go lower than than 2 days ago. And it will be probably dependent upon the market as well next week. But I kind of like that. That chart looks honestly pretty decent for a pop back, and it's pretty volatile in terms of it's got some good range, right? It's got like $5+ range the past couple of days intraday, so that could be a nice bounce back. Trade idea right there. I kind of like that. Don't know much about them, but headquarters, or at least their address, is in New Britain, Connecticut. Okay. Used to live in Connecticut, so a little hometown. I'm not from the area, but kind of a little home state connection. Spiggity SPY. What do we got here? Okay, it's dipping down to some of these areas. So, okay, let's see if it gets caught up here. If it sells off, VWAP is down here towards 448.50-ish. So we can probably see another $1 pullback, maybe if it really sells off, or if we kind of close right here, it'll, roughly right in line with this key zone. This 450 has been a key zone to watch. Those calls that I got are up. I'm not going to, there's no need to sell them. Let them do their thing. I could add, but I would be averaging up more a little higher than I want to, so I'm not going to do that. No need to make any moves personally going into the end of the week. By the way, look at NVOS. It's flat. Hit 102 this morning on super low volume. Now it's flat back to 123. If you got to move from 102 to 123 on a stock, that's pretty crazy, right? You'd think, but in small cap land, penny stock land right now, when volume is drying up, not too crazy these days. As wild as that sound. Black Decker Stanley. Okay, let's take a look at how the Dow is actually close to even. The Dow, look at this. The Dow, by the way, is actually potentially going to go red. It might go red as we speak right now. Can everything stay green the last minute and a half of the market being open? Let's see. Dow was literally up 0.7%, teetering on the edge of going red. Teetering. Let's see. SPY calls at 455. Oh, that's not a bad idea. I really do like the SPY calls into next week. I really do. Maybe I add back one of these. I got some cash. Let's just toss back into one of these bad boys, these 500s. I sold one of these. I'm going to add one. Let's see if I can get 140 or 240 fill here. Can I get that fill before the last minute closes? These are out to June. Yeah, I got the fill. So now I have an average just under $2. So I averaged up on those, but I sold one at like 3. So I bought one back here at like 240. Dow is flat now going into the end of the day. Dow is flat. Can it go red? It's close. Now it's red. Now it's red. Now it's flat. 30 seconds left into the close, and then we'll see how we'll see how things wrap up here. We'll check on FinViz, check the breadth indicators. Okay, it's like under the surface what's actually happening, and we'll wrap things up for the weekend. Pretty wild week, back and forth. It feels like back and forth, right? Chop, chop, chop. But we did finish higher, at least on the S&P, than where we closed last week. NASDAQ is sitting just over 14,000. S&P or SPY is just under 450 right now. SPY back to 470. Amazon sell-off at closing. Basically, that's kind of what it seems like. Some sell-off pressure into the close. So the Dow finishes red, barely, but it finishes red. S&P finishes up about 0.5%. Pretty big sell-off, to be honest, into the close. Not going to lie. That's a pretty... What is this? This must be a wick. Yeah, it's a wick. Pretty big sell-off into close. NASDAQ up 1.5%. Let's look at QQQ. QQQ probably fell back a good bit. Now Weeble's giving me some slowness into the close. It's still, again, QQQ is up still really nice into the close. I don't like buying it over 356 personally, at all. So let it do its thing from here. Better risk reward is below that. But yeah, that's that. So the Dow finished just red. SPY green, NASDAQ green. After what looked like a pretty nasty start to the day, to be honest with you guys. Back to FinViz home. What do we got? Okay. Advancers, about 61% of stocks advancing today, 35% declining. We had over 500 hit new lows versus 129 hit new highs. And 50 SMA, about 25% on the 50 SMA or above. And then 28% above the 200 SMA as we speak. So what I'm going to do now is I'm going to quickly do the little the video for tomorrow, the trading stocks $100,000. I'll post that tomorrow. And then we'll do a live Sunday night. I'll be in Montana Sunday, but I'll have my computer and stuff. So we'll do a live, with futures and all that good stuff, because why not? And I want to do it anyway. But a good sell-off into the close. So we had a nice grinder today. It seemed like a grinder. And then last week we kind of had a grinder into the close, and then a really big acceleration of buying pressure. This week, or at least today, kind of a grinder up. Things were red. Now they went green, and then they pulled back a little bit into the close. So some selling pressure, and kind of not surprised. You had some pretty nice moves in Amazon finishing the day. Let's take a look at Amazon really quick before we wrap things up. Amazon AMZN. What do we got in Amazon? Still, it finished up 13.5% roughly. A nice pullback. Some profit taking kind of makes sense. Honestly, it would have been a really nice breakout trade today, technically. These stocks, to be honest with you guys, are really nice traders in terms of how they move. Now, they're definitely not stocks that that most people trade because they're so expensive in terms of the option chain for an Amazon. But look at this. It had some clear resistance here up towards about 31.5 or so, 31.4. It kind of broke that really, really nicely today, midday, and it held up. This would have been a really nice time to enter some calls as it popped above, held up, and then it grinded really nice. This had a nice move. I'm sure options did very, very well. It had about a 2.5% move into the end of the day, and then it sold off pretty good into the close, came down towards VWAP as we finished off the day. But, across the board, choppy again. I will say, if we take a look at the big picture S&P past couple of days, let me pull up the 30-minute chart. Here's a 30-minute chart. So here, go back to last week. We finished last week here on SPY just about 442. It looked like we potentially could test that level. We didn't today. We got close. We were about $2 off. We tested close on SPY. And then we finished this week at 448. So about a $6 move roughly or so, or $6 or $7 move on SPY across the overall week. Started off really strong, gave back some gains. Facebook was a little contributor to that. I think Facebook really scared a lot of people with how much it sold off. And then, you kind of had Amazon save things. Then we kind of sold off again. Jobs report comes out, and then it bounced back up. So that's their story for this week. I think we can see my next level. I think 462 is realistic on SPY next week, which is where I'm targeting. So I have 2 of those calls. I think we also are seeing a lot of people who are pretty bearish. So I kind of want to go against the grain on that and play the opposite of what people are thinking. And that's really what I think is going to be the case. I think next couple of weeks, it's very possible we very just much grind higher and just kind of slowly grind higher. And I'm, again, in the camp for those who are maybe, like, oh, crash this, crash that. If you're in that camp, I totally agree with you. I think if you look back and look at the monthly chart on the S&P, I mean, look at the extensions. I mean, this is not normal, right? This is not normal. We're going to have a sustained period of a bigger pullback, but I just don't think we're going to see any crash unless we're in a much more euphoric time. So I think we need to see stocks kind of bounce back. The fears right now get bought up and get eaten up. And then if we get back up to, let's say, all-time highs, or dare I say 500 plus on SPY, my real play is, if not my play, but my thought process is 500 plus on SPY. I want to have very little overnight long exposure. That's my plan. Now, we can, of course, go much higher than many may think, or much lower. But if we get a move of 500 plus in the coming months on the S&P, on SPY, I want to have very little overnight exposure. Now, it may not happen, but if we do, that's just kind of how just in my head, how I'm kind of thinking it out. That's my thought process. That's where I'm at least leaning as we speak right now. So we'll see. Let's see. 462 kind of gets you back up to the 50 SMA on SPY as well. I think that's going to be a test coming next week, and we'll see. Maybe we go for more. We'll see. But that's it. I'm going to wrap things up. Thanks so much for watching, guys. All I ask is a thumbs up on the stream. Consider subscribing if you're new. We do these streams. Honestly, we're going to probably be doing them more often as we speak, because they're much more fun in my opinion, and they're more useful, I think, because we can talk through things live, talk about stuff. And if I have ideas, it's like we were talking about before, right? Like the beds ETF, we're just talking through an idea because we saw something in the jobs report that was like, wait a second, leisure and hospitality have the most job increases in January. Let's take a look at some of these stocks in the hotel sector, and boom, like these types of things we can talk through and make sense of on the lives. I think it's more fun. I think it's more useful. So we'll probably be doing more of those in the future. Maybe not as long, but maybe, at least like an hour or so into the end of the day. So that's the plan. Thanks so much for watching, and we'll see you guys next week. Hope you had a great week. Have a great weekend. I will be going to Steve Aoki concert and then flying to Montana literally hours after that. So,